Hello, good morning, everyone. I am Dr. Sumit Pahwa, and I am your host for the day today. And joining me are the panel of speakers, Chandan Narang and Ankita Gautam. Hi, Chandan. Hi, Ankita.
Hi,
Hi,
Sumit.
Sumit.
Yeah. And thank you, audience, for joining in large numbers today. Let me just begin with a little bit of introduction to start with myself, and then I'll introduce the speakers, and then we'll be off to the topic. So, as I said, I'm Dr. Sumit Pahwa. I am currently the co-founder and CEO of COMPLINITY Technologies, which is India's leading compliance software, helping more than 1,500 companies comply with the laws in the country. And I'm a CS and lawyer by profession. I'm also the lead author of Corporate Law Referencer, which is into its 11th edition, a leading book on company law. Joining me is Chandan Narang. Chandan is a company secretary and corporate lawyer as well, with over 18 years of experience, specializing in corporate secretarial, corporate governance, FEMA, NBFC, securities laws, etc. And Chandan has worked with organizations like Religare, PVR, Make My Trip in the legal and compliance domains before joining eMinds Legal. Currently, he's a partner with eMinds Legal, leading a team of 40 plus company secretaries, advising clients on diverse matters on transaction advisory, buybacks, ESOPs, M&A, FDI, OCI, ECBs, secretarial audits, due diligence, liquidation, etc. And Chandan is also co-author for the book Corporate Law Referencer. Joining also is Ankita Gautam. Ankita is a senior associate at eMinds Legal with over 9 years of experience in the Companies Act, FEMA compliances, including incorporations, downstream investments, and she's been actively involved in handling regulatory filings and advising companies on various FEMA related matters. So again, once again, welcome Chandan and Ankita. Uh, this FLA is indeed a very, very important and a current topic. 15 July of every year, the returns need to be filed, and I'm sure every year, hundreds and thousands of professionals may have several queries relating to filing of FLA returns. So this webinar is in relation to that, where Chandan and Ankita will share their experience, including some gray areas, FAQs on the FLA returns. We'll start with Ankita, who will share broad, the high level about FLA returns in terms of applicability, eligibility, timelines, penalties, etc. And then Chandan will exactly get into the FLA return, and go line by line, point by point, and also articulate our own experiences at eMinds Legal of filing these returns and the challenges and the queries that we face. So before we do that, if we can run a quick poll, and then we'll be off to that. Okay, so if you could very quickly answer what describes you best. It's like know your client, KYC, so that we know who is attending the forum today. And do you have experience in filing FLA returns? This will help Chandan and Ankita to gauge the audience, and therefore they will pace themselves accordingly. Okay, 5 more seconds if you could quickly indicate before we end the poll. Ankita, by that time, are you ready?
Yes,
You
Sumit.
you
Yeah,
could share your slide. You could share your slide in the meantime, and I'll just end
yeah,
the poll
Sumit.
5 seconds.
Before
Yes.
Ankita starts, I would like to thank you for this opportunity, to Complinity and you. This helps us connect with our fellow professionals basically and, clear their doubts, the information, the knowledge which we've gained. We are always happy to share, with a larger audience. And, thank you for having us again.
Perfect, perfect. It's only our pleasure. Okay, so I'll end the poll here and share the results. So we can see 26% are practicing, 5% GCs, 18% CFOs, 38% large majorities in-house company secretaries or compliance professionals, and 13% others. And 59%, or you can say 60%, have experience in filing FLA returns, 40% do not have. So Chandan and Ankita, when you describe in your sections, also consider there may be people who are not exposed to FLA. So if you could keep yourself also to the basics so that everyone can understand what you're saying. Okay, over to you, Ankita, to share your screen and take us through the FLA returns. And in the
Okay.
meantime, audience, if you have any questions, put it in the Q&A box. You can keep putting in the Q&A. We'll go for about 50 minutes or so, with these presentation, and then towards the end we'll take a Q&A and we'll wrap up by 1:30. So you can keep putting in the Q&A, and also, let's look at getting our queries answered through the session. Over to you, Ankita.
Okay. Thank you, Sumit. Thank you for this wonderful opportunity to present the webinar on foreign assets and liabilities return to my fellow professionals. It is extremely important for all the entities to file the FLA return to whomsoever the eligibility criteria is applicable, because filing and non-filing will attract the penalty if filing is not done correctly, or if the filing is missed, the penalties under the FEMA will be attracted. Therefore, it is extremely important to get through this FLA return really right. So we'll begin with the FLA return. So first is, what is FLA return? Basically, return is basically an annual return to be submitted by Indian entities which have either received foreign direct investment in its entity, or have made overseas direct investment abroad and have the balance outstanding as on 31st March in their balance sheet. Now, it is very important for everybody to know that FDI includes the equity share also, and the securities that are convertible into equity shares. Many may wonder that why we are filing the FCGPR and FCTRS forms for allotment of shares to foreign entities or transfer of shares to foreign entities, then why do we need to report this FLA to the department? So the question is really great, and the answer to this question is FLA return is basically a data return, which is very crucial for our government. It is important for the RBI to analyze the balance of payment in international and investment position. So the RBI collects this information annually from the eligible entities under the IMF framework, capturing the foreign assets and liabilities at the end of the March. This is very important for the RBI. That's why the FLA return is to be filed. Moreover, it contains the detailed information about the company's profit, turnover, foreign investments, outstanding assets and liabilities with foreign related party and unrelated party. Moving ahead, which entities are required to file the FLA return? So many may think that FLA return is applicable to Indian companies, but this is not the case. The RBI prescribes filing of FLA return for various entities. Of course, the Indian entities are covered, be it a small company or big company, listed company or unlisted company. FLA return is applicable to all the Indian companies registered under Companies Act 2013. LLPs registered under LLP Act, they are also required to file the FLA return if they meet the criteria. The important thing is that SPI registered alternative investment funds, they are also required to file the FLA return. But their methodology of filing the FLA return is different. They are still following the old methodology of Excel-based filing through email for the FLA return, while for the other, it is portal-based filing. You have to log into the portal and submit the FLA return. And partnership firms are also required to file the FLA return if they meet the criteria. Similar is applicable to public-private partnerships. Moving ahead, which entities are required to not file the FLA return? Now we have covered which entities are required to file the FLA return. So it is very important for us to analyze that there may be entities or a situation where FLA return is not applicable. There are certain cases. First is entities which have issued shares on non-repatriable basis to non-resident Indians. It may happen that in a company that the NRI has invested in the shares of the company from their NRO account on non-repatriable basis. So money cannot go out of India. So these kind of investments are treated at par with domestic investment, are not treated as FDI. Therefore, these entities for this type of transaction, FLA return is not required to be filed. Then entities which have received only share application money but allotment is not yet made. So in case 31st March has come and application money has received but the allotment is not made, then the shareholder is actually not a shareholder in your balance sheet. Therefore, these kind of entities are not required to be reported in the FLA return. If your entity has only such a foreign shareholder to which the allotment is pending, it is not required to be reported. Next is entities which do not have outstanding balances of FDI or ODI at the end of the financial year. You may have issued shares to foreign investors in the past years, but as on 31st March, they may not be in your cap table because of share transfer or other reasons. If as on 31st March, the shareholder, foreign shareholder is not there in your cap table, you are not required to file the FLA return. So remember, the cutoff date is 31st March. You have to see the shareholding position of your company as on 31st March only. So what are the timelines for filing FLA return? So most of us may already be aware that 15th of July is the timeline for filing of FLA return. For financial year 2024-25, the due date is 15th of July 2025. And we request all the eligible entities to file the return well within time, because in the last few days of filing, there is heavy rush on the portal and you may face difficulty in filling the form. So plan in advance and file in advance if you can, if the information is available to you. So one more question which may arise, that the audit of your company is not completed yet. Do you still need to file the FLA return? Yes, you still need to file the FLA return. You may file the FLA return based on the provisional basis, based on the internal assessment of the company. In case your company is following some other calendar year as account closing year, then also you need to file the FLA return, but based on 31st March figures. It's not based on the calendar year. It is standard across all the entities, eligible entities, and you have to file it based on 31st March figure only. So one more question which may arise, that revised return is required to be filed in case the original return was filed based on the provisional figures. So yes, the revised return is to be filed. In case there is any variation in the earlier filed FLA return, it does not matter what is the percentage of variation. RBI has not yet prescribed that more than 10% you have to file or more than 5% you have to file. Even if there is 1% deviation, then you have to file the FLA return based on the audited figures. However, the due date is not prescribed by the RBI. Therefore, we recommend as soon as the audit of a company is completed, go ahead and file the FLA return. So you have to remember one thing, that in case you have filed the provisional return, filing the revised return, you'll have to first apply to the RBI for filing the revised return. You can just log into the portal and request for the revised return filing. Moving ahead, what are the consequences for non-filing of FLA return? We must pay attention to this one, because non-filing is not allowed under the FEMA. It will be treated as non-compliance under the Foreign Exchange and Management Act if you don't file the FLA return till 15th of July. Due to any reason, if you have to file after 15th of July, you have to take permission of RBI to file the return post 15th July. And LSF has been imposed, which is 7,500 per return in case of delayed filing. Please note that LSF is per return. It is not consolidated, it is per return if the delay is there. So next is, in case the delay is more than 3 years, the matter will be subject to compounding under the FEMA directions. So it is very essential that we file the FLA return well within time. Moving ahead, what is the process of filing the FLA return? So the process is very simple. Chandan will let you through the form in detail after the slides. So you have to log into the FLAIR portal, flair.rbi.org.in. You have to enter your username, your password, and the OTP, which the authorized person will receive on his email ID. You have to fill the entire form. There are 4 sections in the form. First section is details of the company, which are very basic: names and contact person details. These details have to be entered. On the second section, you have to enter the details of the shareholding company of the company, total paid up capital divided into the foreign investment, and then sale, purchase, profit figures have to be entered. Third section is related to the FDI, foreign direct investment, which have been made in the eligible entities entity. Then that is divided into more than 10% and less than 10%. There is portfolio investment in case of secondary market transactions. And in the fourth section, you have to mention overseas direct investment in case you have made any investment abroad. So fifth is the variation report. In case there is any difference in the figures with respect to the filing of previous year and current year, the variation will be visible there. You can just have a look and analyze your filing details. And after the entire form is ready, you just have to click on submit button and the form will be filed. When you click on the submit button, you'll get the acknowledgement and the form both in PDF form. Remember to download the form and the acknowledgement both. Remember that this acknowledgement is RBI's system generated acknowledgement, and it is the responsibility of the company to save it. In case due to any reason you were not able to save the file form, don't worry. You can just log into the portal and now download the file form later. You can also download the previously filed form from the FLA login. Moving ahead with the registration process, which is very essential. Before you file the FLA return, it is essential that you register on the FLAIR portal. What is the process of registration on the FLAIR portal? The process is very simple. You just have to click on registration for new entity user on the FLAIR portal, fill up the entire form, enter the details of the company, the registration number, contact person, email ID, and details, attach the necessary documents, which are the authority letter and verification letter in the prescribed format. The format is available on the FLAIR portal, and then you have to submit the registration request. Please note that whatever you fill in the authority letter and verification letter has to match with the details you are filling in the form. In case there is any discrepancy in the information, the RBI may reject your registration request. After the registration is approved by the RBI, the login credentials will be emailed to the authorized person email ID. So the authorized person plays a crucial role here. All the OTPs will be sent to the authorized person whenever login is required to the portal. All the registration details also will be sent to the email ID of the authorized person. So please take note of this, that the authorized person should be easily approachable to take the OTPs and passwords. Moving ahead, important points to consider during and after registration. This is very essential. So while you register on the portal for getting your account entity registered on the portal, there are certain things which you must consider. First is authority letter and verification letter. So the authority letter and verification letter, as I've already informed, that this has to be in the prescribed format. The format is available on the FLAIR portal. You just have to download and fill in the details. Authority letter has to be signed. Earlier in COVID time, there was a notification which came which said that there is no need to get the authority letter physically signed or fix the company stamp. That was there in COVID time, but now we recommend that since the situation has become normal, you better get it signed physically and upload on the portal. Verification letter is also required to be submitted, but that is not required to be signed. A PDF version can be uploaded after filling. Self-attested copy of PAN card of authorized person to be attached along with the company's PAN. The authorized person PAN card is also required to be attached in the authority letter. If you don't attach this, the RBI may reject your registration request. Next is email ID for the password reset will be sent to the authorized person email ID. As I've already informed that email ID, authorized person plays a crucial role in the FLA with respect to the login per se, because authorized person will be receiving all the OTPs and first time username and registration passwords. The password which is sent to the registered person, authorized person email ID, have to be changed within 24 hours of receipt, which means that you get time of 24 hours to update it. You have to log into the portal. You'll get an option to update the password, and then you have to update it. In case you are unable to update, if you can't update, if you are unable to update because of any reason, the password may be accepted or may not be accepted by the portal. If it is not accepted, you'll have to send an email to Survey FLA. They'll help you further. OTP will be sent to authorized person email ID at every login. You may think that authorized person will receive only one time this OTP for login, but no, this is not the case. Every single time you enter the username and password, try to log in, the OTP will be sent to the authorized person email ID. So it is very important that when you start filling the FLA return, you better have the entire information and data readily available with you so that there is not a requirement of logging to the portal again and again for this OTP issue. Moving ahead, when do we need to approach RBI? There are certain cases where we need to approach RBI for help, which includes in case you have forgotten the password, you have to send an email to Survey FLA asking for the revised password, the password will be sent to the registered authorized person email ID. So remember, the authorized person ID has to be active. In case you need any revision in the previously filed return, as we have already discussed, that certain scenarios attract filing of the return again, which may be because of any variation in the data already filed, or because if you file the return at first place, basically provisional figures, then the revised return is required to be filed. But the process of filing the revised return is different. You don't need to send an email to the department. You just need to log into the portal. You will find the option there to revise the return. So no email will be sent to the company's authorized person that RBI has accepted your revision request. You have to log into the portal and see again if the request is updated. The status is visible there. AIFs. AIFs are required to file the FLA return based on the old methodology, which is Excel-based return, which used to be there before June 2019. AIF, although are required to file in Excel, but they have to register themselves on the FLAIR portal. After registration, they have to send an email to Survey FLA asking for the format of the FLA return. The format is quite a bit different considering their structure of the entity. Then, basis that Excel that they have received, they have to fill in the details and submit the details by email only to Survey FLA. The Survey FLA will send an acknowledgement mail to the authorized person on the email ID. Next is deactivation cases. There are certain cases in which the deactivation request have to be made via email. In these cases also, requests have to be made to RBI. So moving ahead, what are the cases for deactivation of entity user registration? There are certain cases where we need to deactivate the old account and create a new account. So what are these cases? So in case the entity name, PAN, address has changed, you need to send a mail to Survey FLA. You have to mention your company's name, registration number, username, and preferably the reason for deactivation also you should mention. Basis on a request, the account will be deactivated and the new account then can be created. Similar is the situation in case the authorized person details are changed or head of institution emails are changed. Also, in case where the registration number of the entity is changed, in that case also the FLA return, FLA entity has to deactivate their current account and make a new account. But one thing has to be taken note here that in case any other case where SIN is not getting changed, the old data, old filings which you have made from the account you are getting deactivated will be transmitted to the new entity user that will create. So you'll have an access to the old filings, but in case your SIN is getting changed, the previous filings will not get merged and you will not be able to download the previous filings from the new login. So before deactivating the account, in case your registration number is changed, you better make sure that the previous returns are downloaded and in your records. Moving ahead, how to file the FLA return. So Chandan will take us through the detailed analysis of what is to be filed in the FLA return, how is the FLA return required to be filed. One thing which everybody has to take note is the data which is to be entered in the FLA return is basis the financial year. The data as on 31st March is to be entered. It is not as per the calendar year or any other account closing period that the company may follow. Also, in the FLA return, the data has to be entered in INR lakhs. So you have to make sure of this. So thank you, everyone. I would now request Chandan to take us through the form in detail and explain the important things which we have to take care of. Chandan?
Thank you, Ankita, for very very clearly clarifying on what all companies it is required, the applicabilities, penalties, and all these things. And also, how do we go for registration? What are the cases when we need registration or re-registrations? I hope everyone is clear about the process. So now I'll take everyone forward on how to fill FLA. The real part comes now. So let me share my screen. I hope my screen is visible to everyone. Ankita, can you confirm?
Yes, it is visible, Chandan.
Okay, okay. So the entire FLA runs into four sections. There is fifth section also, which is a variation report, but majorly we have to fill in information in first four sections. So section one talks about normal company related details, the identification details, name of the company, PAN and SIL, or in case of LLP, it's LLPIN, other entity, it is UIN. So these details are generally auto-filled because we've already provided these details while registering our entity. So, the gray shaded are the ones which are auto-filled basically for the understanding of everyone. Then comes the contact details, name of the contact person, telephone number, mobile number, etc. of the contact person. So this is the authorized person, details who has been registered as authorized person also. So we need to fill in these details. Email ID, head of institution, for example, CEO, CFO, if you need to mention that. So they need to know who is the head of institution or whom they can held responsible in case of any non-compliance. So contact person is there to work on the filings, dealing with RBI on day-to-day matters in case. But head of institution is the one who is responsible. So we need to see who is actually responsible for all these compliances and all, and we can accordingly provide email ID of that person, designation and website if any of the company. Account closing date, so generally it is 31st of March, but there are certain companies who have Jan to December or any other financial year, so we need to provide our account closing date, etc. So even if account closing date is different than April to March, 31st of March, we, as Ankita clarified, we still need to provide information on the basis of 31st March only. So that is the reporting date basically which RBI considers for FMA. Nature of business activity. So you will find a drop down here. You have to select your activity. If you have more than one activities in your company, select the activity which has major revenue. Whether your company is merged or amalgamated during the year. See, if your company has got merged into another company, your company does not exist anymore, you need not file, you cannot file. But if any other company has merged or amalgamated into your company, so you need to provide details about, if there is any merger happened during the year, yes or no, and the name of the company is merged in case there is a change in name. Whether the company is listed, yes or no, you need to provide that. Then comes the shareholding part. You need to provide here in the total ordinary equity shares or participating preference shares issued as of the previous year and the current reporting year. In our case, 31st March 2024 and 31st March 2025. So ordinary equity shares, participating preference shares, and non-participating preference shares. So participating preference shares means the preference shares who've got rights in the surplus of the company or surplus or the dividend in case extra dividend is distributed as surplus, right on the dividend part as well, right? So instead of whether the preference shares are convertible, non-convertible, for the purpose of FLA, the shares are actually bifurcated by way of participation and non-participation. Then identification of reporting entity in terms of inward FDI. If your company is an associate of foreign entity, the foreign entity holds between 10 to 15%, then your entity becomes an associate of the foreign entity. If it is more than 50%, then it is a subsidiary. Or if it is a public-private partnership, SPV, or any other. For example, the foreign shareholding in your entity is less than 10%, so you'll have to select others. There are certain examples wherein some foreign investors have invested into the company. So instead of an entity investing into that company, there is a foreign individual, Indian or foreign, but a non-resident Indian, we can say, holding more than 50%. So, but since the investor is an individual, you need to select others in that case. Then type of your company, whether it's a financial company, other financial company. In case it's not a financial company, then you need to select others, right? So you'll find a drop down in that case. Whether the company is an asset management company, yes or no. If the company has got technical for financial collaboration, yes or no, you need to provide. And whether the company has any business activity during latest financial year. So there might be certain companies who have received foreign investment, but there was no business activity during the year. So you would need to select it accordingly, whatever is applicable in your case. Moving on to section 2, a bit more details on the paid up share capital and the shareholding part. So total paid up capital, earlier you have mentioned the number of shares, ordinary equity, participating, etc. So again, we have to mention the number of classes also applicable in section 1. In case the number of classes are more than one, it will ask you to mention face value on its own. Otherwise, it will take face value from the one which we mentioned in the section 1. If the classes are more than one, it will deactivate entering face value in section 1, and you'll have to manually enter it here. The number which which are appearing shares in actual, ordinary, participating, non-participating.
Welcome to COMPLINITY Technologies. COMPLINITY is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. COMPLINITY is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000 plus laws and 24,000 plus compliances. All in an integrated platform that is easy to use with automated alerts and risk management capabilities. Is why compliance managers, general counsels and chief financial officers choose COMPLINITY every time. Join the most innovative and prestigious brands that use COMPLINITY. Automating your compliance management, request a demo at complinity.com.
Amount in INR lakhs. Suppose you have only one class of equity share or one class of preference share, and you mention that accordingly in section 1. So the amount will auto-calculate it here. But in case the classes are more than one, it will not be auto-calculated because you may have different nominal values, different face values for your shares. In that case, you will have to manually enter the details in this box, right? So this is the overall total paid up share capital held. Out of that, now we have to mention the non-resident holding. So equity share capital bifurcated into, as per your shareholding pattern, whether it is held by individuals or companies or FIIs, FECIs, foreign trusts, private equity funds, pension funds, whatever is applicable, NRIs, PIS, for example, you need to mention the number of shares and amount in INR lakhs, whichever is held by them. Then participating preference share, again, we have to bifurcate as per our shareholding pattern, whoever are holding this. The same category of shareholders are mentioned here also. You need to select whatever is applicable in your case. Then the total of participating and non-participating will appear automatically here. Total paid up capital and total equity and participating preference shares. So these boxes will be auto-filled when you fill in the details in the below cells. So this will calculate your non-resident equity and participating preference share capital in percentage, because you mentioned the total paid up capital as well as the non-resident equity holdings. Moving forward, you need to provide details about your profit and loss account, profit and loss before tax during the financial year, April to March 24 and 25 in this case, and profit and loss after tax. Dividend, if any, if you've paid during the year, interim or final, you have to mention here. And tax on dividend, generally this is not applicable now because dividend is taxable at the hand of the recipient these days. So balance will be your retained profit, so which will be auto-calculated. Then you have to mention reserve and surplus from the balance sheet. So this reserve and surplus as coming in your balance sheet, including the accumulated profits, if any are accumulated losses, whatever, you have to mention here. So this includes all your reserves, securities, premium, P&L balance, etc. Out of which you have to mention the P&L balance separately also here, right? So if you see, this is a here you need to mention April to March 2024 previous year balance and this year's balance. So effectively, the retained profit which is coming in the above section, retained profit during the year for the year 2025. So previous year profit and this year's profit, the balance should come accordingly in the profit and loss section. So net worth will be auto-calculated. So this net worth will be the reserve and surplus plus the paid up capital which you have mentioned, above. So accordingly, the net worth of the company will be calculated here. Then you need to mention the sales and purchases made during the financial year. Domestic sales. So this is the sales which is appearing in your P&L domestic and export. You need to, so how do you find whether it is domestic or export? You have to go to the notes to financial statements wherein uh, foreign exchange earning and outgoes are mentioned. So imports and export, etc. will you will find there, and the balance is your domestic purchase, right? Again, on the purchase point, purchase is very clearly defined in the FAQs also of given by RBI. So purchase means any expenses which is coming in the P&L minus the depreciation, right? So it might be your rents and repairs, your legal expenses, whatever. They consider it as your total purchase. It's not only the purchase of goods and services, total expenses which are appearing in the P&L, including the capital purchases, but excluding depreciation, is the figure which we need to mention here. So is there any employee in your company? Yes, no, you need to mention the number of employees on the payroll as at the end of previous year and the current reporting period. So these are the details. Now we have to mention the details about individual shareholdings, uh, investments made under FDI. So this section is divided into two parts. If the investors hold more than 10% of equity and participating preference shares on a fully diluted basis, you need to mention details here. If the shareholding is less than 10%, you need to, it will come later on. So 10% or more equity participation, equity means equity and participating preferences both, as I mentioned. So you need to mention how many foreign direct investors are holding 10% or more of such capital, and month and year of receiving FDI for the first time in your company, not from that particular, one particular investor, but first time your FDI is received in your company, right? Then the details about, the foreign direct investors who have more than 10% shareholding in your company. Name of the non-resident company or individual here, you need to mention. Country of non-resident investors, if you get a drop down here, you need to select the country of non-resident investor and the percentage of equity and participating preference share capital as and March 24 and March 25. So once you calculate the percentage, again to reiterate, this percentage has to be calculated on a fully diluted basis. So once you put in the percentage, it will automatically show the liabilities to direct investors. So this percentage will be the percentage of the net worth which is calculated above. So suppose your investor holds 15% in your company, you mentioned 15% here in the percentage of equity. So this the total liability will be 15% of the overall net worth which is due to that foreign investors, and it will be auto calculated here. Then claims on direct investor, reverse investment. Then there might be certain cases wherein your company has invested in the foreign investor entity. So in case of any such investments, you need to mention the details here. Then other capital liabilities to direct investors. In case there are any other liabilities to direct investors, for example, your investor has got equity shareholding in your company and non-participating preference shares. So non-participating preference shares will come here. Participating preference shares come, at the top itself, but non-participating preference shares will be coming as other liabilities or other capital. Or your investor is holding CCDs, NCDs, has given any loan to your company, or there are any trade receivable, trade credits, etc. All those numbers will come here. You'll have to aggregate the overall liability to the direct investor, and you need to put in the number here. In case you have any claims on the direct investor, for example, you are providing any services to your direct investor, and you have certain trade credits which you have to recover. So those credits, those receivables, you would need to enter here. Disinvestments in India during the year, in case there is any disinvestment during the year. For example, previous year your investor was holding 15%, now your investor is holding 12% and has liquidated 3%. So that will be a disinvestment of 3%. You would need to mention the details of disinvestments here. But this only the change in percentage does not mean that there is disinvestment. For example, there is dilution in your shareholding by way of issuance of further capital, but there is no liquidation. Then you don't need to mention anything here at the disinvestment, right? So, for example, yeah, here you have mentioned details of one foreign investor who is holding 10% or more. In case you have more than one, for example, the second investors, you need to put in the same details, similar details for the second investor here. So you find a section add or save button here. Just after you fill in the details of one investor, you click on add, and you will find the similar boxes to fill in the details for the second investor. Then investment in India under FDI scheme, less than 10% equity holding. So in case of less than 10%, the details are mentioned not the investor wise but country wise. So in case you have some investors coming from investor from Singapore, let's say 4 or 5 investors, but all of them are holding less than 10% shareholding. So you would need to club their shareholding, and you need to mention the country as one. In case there are more than one countries, you would need to mention more than one countries. Again, this section relates to less than 10%. So there could be certain other related parties who do not hold any equity capital in your company. For example, your fellow subsidiaries, you've got a group companies abroad. You would find all those details in the related party transaction schedule in the notes to accounts, and you would understand, okay, these are the related parties, and for all the related parties, whether they are holding any equity participation or not, if there are any outstanding, be it towards trade receivables, trade payables, any other claims which are due or which are applicable as per your balance sheet. So you would need to mention details of those entities also. Just don't forget that this is not this only it does not only talk about the equity participation, but if there are any other liabilities or claims also, you would need to mention the number of countries accordingly. So in case your related party has direct investment also, equity and participating preference shares, you would need to provide details here. A country of non-resident investors, just like, for example, Singapore I mentioned, you mentioned the country, percentage shareholding, type of capital, again, similar to how have we mentioned in more than 10% cases. Liabilities to direct investor will be auto-calculated as per the percentage. Claims on direct investor, reverse investment in case, so you would need to mention those details. Other capitals, liabilities to direct investors and claims on direct investors, as I mentioned, there could be related parties who do not have any equity and PPS capital here, participating preferential capital here. You would need to mention details of such investor here in this case. And disinvestments in India during the year for these investors, need to fill in the details here. Okay, so again, if you have more than one countries, you would need another section to fill in these details for another country, right? Then portfolio investment in India. So portfolio investments, in case you're a listed company, for example, and you've got foreign portfolio investors or any other investors who are holding shares through portfolio route, through stock exchanges, etc. So you need to mention equity securities at market value here, amount in INR lakhs. Debt securities, money market instruments, bonds, and other instruments, etc. So you would need to mention the details here. So, for example, you've got a investor who has only non-participating preference shares, does not have equity and participating preference shares. So that and it is not a related party as well. So you would not find any section to fill in those details in point number 1 and 2 above. You would need to mention details of participating preference shares of an unrelated party here. If your unrelated party is holding any CCDs, you would need to mention here, depending upon the maturity and all. So this is a section which is generally, people get confused what to mention in this case. Again, I'm clarifying, in case your investor holds only non-participating preference shares or CCDs under FDI, then you would need to mention the details here. And any disinvestments during the year, again, you would need to mention. Other investment, in case you have any other liability to relate to any non-related entity, be it in the form of trade credit, loans, currency and deposits, or other payable accounts, the details have to be mentioned here to purely unrelated entities. One question at times comes, we have received only share application money as of now from unrelated parties. The first time investment that entity has done. So where to mention that share application money? That will come in the other payables account. Coming to section 4 now, foreign assets. We've talked about foreign liabilities, direct investments into India. Now we'll be talking about direct investment outside India by our entity. We have done overseas investment, so we would need to mention details here. Even if you don't have FDI in your company, but if you have done ODI, you would need to file FLA as Ankita clarified. And section 3 in that case would not be required to be filled in unless you have any liabilities or claims from unrelated parties. Then you would need to fill in section 4, which is foreign assets, because that has become your asset. Your subsidiary is your assets. You would need to provide details about subsidiary or JV outside India herein. So again, this section breaks into whether the holding is more than 10% or less than 10%. In case it is more than 10%, then investor-wise details come. In case it is more than 10%, then country-wise details come. So number of direct investment enterprises, number of overseas entities basically as on the end of reporting period, 1, 2, or howsoever it may be. Month and year of ODA made first time. Then investor-wise detail come, name of the direct investment enterprise in case your holding is more than 10%. Percentage of equity and participating preferential capital. You would notice that in section 3 also we have mentioned these details on also as well. For 10% or more holding in our company, now 10% or more holding by our company overseas. So we would need to mention the details here. Then reported foreign currency, whether it is USD, it is SGD or any other currency. For example, we would need to mention that. Total equity of that DI paid up capital of that direct investment enterprise, that foreign subsidiary or foreign JV, equity of that company held by you, percentage, right? Reserve and surplus of which profit and loss account balance. Reserve and surplus, just like you mentioned. So there was different sections for P&L, reserve and surplus, but in case of foreign assets, they have clubbed it in one section. They are asking for reserve and surplus here only. So you would need to mention reserve and surplus, and your net worth will be auto calculated because you mentioned the total equity paid up capital, your percentage here, and reserve and surplus. Net worth of DIE will be auto calculated. Exchange rate in rupees per unit. So you need to mention the exchange rate as of the end of the reporting period. For example, 31st March 2024 in case of previous year, and 31st March 2025 in case of current reporting period. Total sales of that foreign entity, out of which exports in their case, total purchase of which import in their case, and again number of employees on the payroll of that foreign entity. In case, so this is the same details for in case you have more than again the more than 10%, but you have any other claims also other than the equity and participating preferential capital, because equity and participating will come here in case there are any other details, claims on direct investment enterprise and liabilities to direct investment enterprise other than the equity and participating preferential capital, just like any other investment, you've given loan to that foreign entity, there are any trade receivables, payables with that foreign subsidiary, so that will come under other capital. This investment, if any, done during the year in that other capital, other company, so you would need to mention here. Then direct investment abroad less than 10% holding. As I mentioned earlier, it will be mentioned as per country wise, not the investor wise. Same details are appearing here. So you would need to mention the country of non-resident DIE and the percentage of equity shareholding, type of share capital in that case. We don't need much details like reserve and surplus, P&L, etc. In this case, if the shareholding is less than 10%, you simply need to mention the total claims on direct investment enterprise, equity and participating preference shares, and any liability in case of reverse investment, other capital, other liabilities, etc. Claims on direct investment enterprise, liabilities to direct investment enterprise, trade payables, trade receivables again to that related party. If there are any other related parties, also the group companies, etc., you would need to mention here. Portfolio investment abroad, in case your company has done any portfolio investment overseas in any listed company or any bonds or anywhere. So you need to mention portfolio investment or at market value, debt securities, if any, money market instruments up to maturity of 1 year, of bonds and other instruments maturity of more than 1 year. If your company has done, you need to mention the details here. All the details are in INR lakhs. Again, reiterating, Ankita has also mentioned that. In case you have any other investments, outstanding claims on foreign unrelated parties. So you've given loan to any foreign entity which is not a related entity after seeking RBI approval, let's say, or if there are in trade credits, any currency or deposits or other receivable accounts. Again, suppose you have invested into a company and that money lies only as share application money, but the shares have not been allotted yet. You would need to mention as other receivable account. This is how we fill in details in the entire FLA. Once we fill in the details, a variation report, if any, will be auto generated. This will be the variation report as of the information we provided in the previous year. In case there is any variation, it will show the variation accordingly in the paid up capital, net worth, total sales, total purchase, other investments, other investment assets. So this is auto filled, auto calculated. In case there is a variation, we would advise that you first revise your previous return unless there is a regrouping happened in this year. For example, you previous year you filed return on the basis of provisional financials only, but there were sudden changes in numbers on the basis of audited financials, but you forgot to revise the numbers. First go and file a revised return so that the variation doesn't appear for previous year. However, if there is a we might have a question that this year's number are different than previous year audited numbers. This may be a result of regrouping or revision in financials, etc. But you have already filed your previous FLA return on the basis of audited numbers. You need not revise the return then, because ultimately these are the audited numbers which we have to report. Right. So this is all from my side, Sumit. I think there are certain common FAQs also which we have generally, and if you can run through pull those up, and we can then see uh,
Yeah,
the
let me just do
responses.
that.
Let me stop share then.
Yeah. So, friends, this is a quiz compiled by the eMinds legal team, and it's just you have to answer yes, no, or maybe. So, I'm just launching the quiz. These let us test the understanding what you've received, whether these speakers have done a good job or not. So, if you could answer, I'll go question by question. Whether a company needs to submit the FLA return if it has received only share application money. Yes, no, or maybe. Then second question is, or maybe I'll wait for a second while people are answering. Chandan, you're able to see all the questions together, right?
Yes, I can see.
Yes, yes.
First three questions are visible.
All the questions are visible, right?
Three
Yeah.
questions.
First three
No,
questions are visible.
Ankita, you can scroll down and
Scroll
you'll
down.
Yeah.
find
Yeah,
all
yeah.
the questions.
Yeah, so friends, you can keep answering all the questions after the first one. Go to the second one. Is a company required to file the FLA return if it has only received CCPS or CCDs? That's the second question. Okay, I see less people are answering the questions. There are no negative marking. Please answer whatever you feel like very quickly. Yeah, okay. Okay, now people have started filling up the third, fourth, fifth also. Okay. So I will not read the question. Maybe we'll read the questions towards the end, and maybe I'll request the speakers to also offer the correct answers. But we give you 2, 3 minutes to sort of answer the questions. Let us see if the majority vote is the correct answer, or is it otherwise? Fastest finger first. Okay, so I see certain people have finished all the 10 questions while others are filling up. When more than 50% have finished, I'll end the poll. So, you should be in the first 50%. So, very quickly, if you could answer. We're already at 42%, people having filled up the responses. 47% have completed the quiz. 49. Okay, 50 have done, but I see a lot of people are submitting, so I'll wait for a minute more. You remember the days when we were writing our exams and the teacher used to stand on our head, and I used to most of the times ask for 3 more extra minutes to finish the answer in the CS exams. Yeah. So friends, last 60 seconds, 60% have completed the quiz. If the other maybe 10-15% more, if we can have a special resolution by 75% majority, I'll really feel happy in the next 60 seconds. Okay, last 30 seconds. We've got 68% majority already. If we can, the moment we hit 75, I'll close the poll quiz. Okay, last 15 seconds. You can answer anything, no negative marking. Last 10 seconds.
I think these are not very difficult questions while these appear, but
Yeah,
after what we've clarified, it should be easier to answer.
yeah. Okay, we've got 72%. I feel that we are slightly 73. Okay, so what I'll do is, Chandan, would you? I'll end the poll now. It's 73. Okay, this is almost 75 now. So I'll end the poll, Chandan. If you can very quickly, Chandan and Ankita, if you could explain, I'll share the results also. If you could now also explain about these things very quickly. Yeah.
Sure.
You can see the questions, Chandan, on the
Yeah, I
screen.
can see.
Yeah,
Yeah.
if you could just talk about the right answer.
Okay. So the first question is whether a company needs to submit FLA return if it has received only share application money. So if there is no existing FDA in the company and only share application money is appearing as of 31st March, then we need not file. So the
Yeah.
answer is no.
So 70%
Is
people
it?
are correct. Okay, I'll read the
Yes.
question, Chandan. You can tell the right
Okay.
answer. Is a
Sure.
company required to file the FLA return if it has only received CCPS or CCDs?
Yes, we need to file that because CCTS and CCDs come under FDI route. So we would need to file that depending upon the section which we have to see.
Perfect. 77% people are again correct. My company had foreign investors in 23-24, but they exited before 31st March. Is the FLA filing still required?
If all of the investors have exited, there is no FD as at 31st March
Yeah,
2025. We don't need. So
don't
no.
need. So 38% people have still reported yes. So, please stand corrected. It is not required. It was covered in the presentation also. In my company, some foreign investors no longer hold shares as on 31st March. I think it seems to be repetition, is it? The third and fourth one?
So the first one is all of the investors have exited, I guess, and second one is some of the investors have exited. So do we need
Okay.
to provide details of those investors if they still hold some detail? If they are not holding any capital as of now, we don't need to mention about their details because we need the current reporting period is 31st March 2025. So we have to consider cap table of 31st March 2025 in that case. And the shareholders who are there as of 31st March 2024 and not appearing in 31st March 25, then we don't need to report about
Their
those.
details don't need to be reported, but whoever is there on 31st March 25, their details need to be reported,
Their
right?
details we need to report.
Okay. Should purchases include depreciation and capital goods?
So depreciation has to be excluded from total purchases, but purchase of capital goods will be covered. So it is the total expenses coming under in the P&L, excluding of depreciation. So total purchases will be
So
considered.
the answer was yes and no both. So I think the question,
Yeah.
so if we can excuse the people because the answer was both yes and
Yeah.
no, right? Okay, so if a company has no FDI from a foreign related party but has outstanding claims or liabilities with it, should it be reported in the FLA return?
So in case
No,
your
it,
company has only the FDI out, the no FDI is outstanding as on 31st March, there is only receivable payable with foreign related parties, FLA return is not required to be filed. But in case as on 31st March there is FDI also, then both the things have to be reported.
Yeah, that's a very wonderful difference, and 81% people unfortunately have answered it wrong. So if you have an FDI and also foreign assets and liabilities, then you need to report both. But if there is no FDI and only assets and liabilities, then you don't need to report those asset liabilities. So the actual answer is no, whereas
yeah.
81% have reported yes. Okay, my company follows the calendar year and filed the FLA return based on provision financials. Is it required to file a revised return after the audit? So 90% people say yes, and I think the answer is yes.
The answer is correct.
My company has received downstream investment from a FOCC. Is FLA return filing mandatory in this case?
So FOCC is basically a company which has received FDI in its entity. FOCC needs to file the return because it is the direct foreign investment in its cap table. But the step down subsidiary, if FOCC invest in the does downstream investment, then the entity in which the downstream investment is made is not required to file because that's not the case of FDI.
Can you, for the benefit of audience, articulate what is FOCC?
So
Foreign owned
basically, if
and
there
controlled company. Yeah, Ankita, go ahead.
So basically, if there is an Indian entity which receives foreign direct investment from a foreign entity and further invest into another Indian entity, that is called FOCC. So FOCC, when investment is made into the another Indian entity, that is called the downstream investment. But in case your entity has received downstream investment, that is not a direct FDI. Therefore, FLA return is not required to be filed.
What the
But
full form
the
of FOCC?
foreign owned and controlled company.
Yeah, okay. If we re-register on the portal, can we access the FLA returns filed earlier?
So this was discussed during the PPT also. In case your registration number has not changed, you will be able to access the old returns also. But in case the registration number is changed, the old returns will not be visible in the new login.
Right. Are domestic assets and liabilities of the Indian company required to be included in the FLA return?
No, only the foreign assets and liabilities are required to be reported.
Perfect. So this was a good quiz. Over to you, Chandan, again. You're on mute, Chandan.
Before moving ahead, I would like to give a brief background about who we are and what we do. I'll just share once.
Yeah, take a minute and do that, Chandan, quickly. Yeah.
Yeah. So for the knowledge of everyone, we are eMinds Legal. We are one of the finest corporate law firms in India. So we specialize in corporate governance, risk, and compliance. So our main areas are corporate secretarial, corporate legal, accounting, taxation, and payroll. And we also provide services on registrations, licensing, SEZ, STBA compliances, and anything and any on the compliance side. We do help our clients. So we've got 5 partners and 60 plus team of company secretaries, corporate lawyers, chartered accountants, and CMAs, and serving more than 400 clients on the areas which I mentioned. Our entire corporate secretarial, FEMA, NBFC, securities laws, listed regulations, fundraising. On the corporate legal side, also corporate, commercial corporate litigation, IPRs, accounting, taxation, payroll, all these things we handle. And we are also we've authored one of the best-selling books on Companies Act in the name of Corporate Law Referencer. So maybe we'll give more details about that. So as I mentioned, we are serving more than 400 clients, and some of the important clients include Genpact, Fujitsu, Hitachi, which is Protean now, Walmart, Heinz Healthcare, ZF, Admiral Group, Group 4, Tara, Johnson Matthey, And there are certain various startup clients also whom we are helping, like Burger Singh, Your Space, Class Plus, Scooter, Smartworks, Altair. So various clients, we've got diverse clients, MNCs, MSMEs, SMEs, various startups. So all kind of services we help them with. And the partners I mentioned, so Dr. Sumit, Kapil, Preeti, and I are the secretarial partner, and Sandeep is the senior partner in the accounting domain. So that's all about eMinds Legal. Any questions, any queries with respect to FLA, we are happy to have. Preeti and my contact details are mentioned here. One can notice email IDs and mobile numbers. So let us know how, if we can help you, serve you on any front. So now, Sumit, I would like to request you to throw some light on our publication also, corporate law referencer.
Yeah, absolutely. So I'll just share about corporate law referencer. Chandan, you can unshare the screen, and
Sure.
and then we'll go on to the Q&A. As Chandan said, queries. We have ample number of queries which have come up on the forum. So I will just share that in a minute. In the meantime, I'll share my screen and uh, show about the book. Yeah, you can share. You can see my screen, Chandan.
Yes, we can.
Right. So this is the book, the link I already sent you in the chat box, corporatelawreporter.com, and there's a link. This is the book name, Corporate Law Referencer. And I just want to highlight over here, it's a 3,000 page, 2 volume book, and it's a 360-degree view on Companies Act. And here's what it contains at a high level. First is, the best part about this book is that section is the king. First there's a section, and below the section, there are circulars, orders, rules, notifications, procedures, FAQs, resolutions, judicial precedents, everything related to that section. And the cutout of the rule also, by the way, everything related to that section is under that section. So it's a full commentary in a way, including all the statutory and practical aspects and the judgments under that section. That is a USP of the book. And there are annual editions. So this is the 11th edition. This started in 2013, and every year this has been sort of revised. There are 150 plus procedures, including checklists on listed and unlisted companies. There are 23 tables highlighting listed and unlisted companies compliances also. 800 plus FAQs, including gray areas and practical issues. 250 plus key judgments by Supreme Courts, High Courts, NCLAT, NCLT. 100 plus resolutions, secretarial standards, listed company compliances, checklists, adjudication orders also, etc. So these are the editions every year. There you can see 11th edition was in 2025, updated as on 1st April. And a lot of other details on which are the 23 tables. And you can see very rich with content, checklists, tables. And here are the 10 reasons why you'll fall in love with CLR. So this book has sort of sold over 10,000 copies in the last few years. And there's a lot of content on this page, and a lot of praise which we've received from senior folks and from ex-past presidents and of ICSI, ICAI, and other senior people. So just go through the link which we have shared with you on the chat box. And if you would like to order, you can straight away order with 20% discount and free shipping all over India from the same link. So this was regarding the book. And coming next, I'll request my Complinity team to share a brief about Complinity, and then we move on to Q&A.
Welcome to COMPLINITY Technologies. COMPLINITY is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. COMPLINITY is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000 plus laws and 24,000 plus compliances, all in an integrated platform that is easy to use with automated alerts and risk management capabilities, is why compliance managers, general counsels and chief financial officers choose COMPLINITY every time. Join the most innovative and prestigious brands that use COMPLINITY. Automating your compliance management. Request a demo at complinity.com.
Yeah, so that was Complinity. So I am a partner at eMinds Legal and also co-founder at Complinity. And so Complinity is India's leading compliance software, helping companies comply with all the laws. And as I said in the introduction, Complinity is working with more than 1,500 companies in India, and the large ones like Panasonic, Nivea, British Council, Oberoi Five Star Properties, Amaron's Battery, and many more. Again, listed companies, unlisted companies, MNCs, PSUs, etc., etc. So if you're interested in Complinity, how can Complinity help you? Please register for a demo, and I'll also do a small poll, and then we move on to the Q&A. Would you like to have a demo of Complinity compliance software? If you are interested, just say yes. And also would you like to be a speaker in future Complinity webinars? So we keep organizing these webinars on and off, and we bring experts on different topics. If you would like to be a speaker, please indicate and we'll sort of reach out to you. So I'll give say 30 seconds, and then Chandan and Ankita, be ready for the Q&A sort of rapid fire round.
Yeah.
Yeah. Okay, so anyways, let the poll go on and we can start okay, yeah, for receiving the recording also, the links are mentioned in the chat box. Please subscribe to our channels and you will receive the recording. Okay, so we'll try to answer as many questions as we can and let us see where do we land. So Chandan and Ankita, whoever feels or fastest, you can please answer, and I'll keep doing the rapid fire questions. So AIF receiving money from NRO accounts, whether reportable?
So no, if the investment is on non-repatriable basis, it is not to be reported.
Right. If in all previous year we were filing FLAs, but this year as on 31st March, my company has nil FDI or ODI, do I need to still file the return? I think no.
No.
No. What are the main advantages of filing FLA, penalties for not filing the return? There's no advantage at disadvantage. It's a statutory requirement, and of course there are penalties also. So there's no question of advantages. If a company is merged after 31st March but before 15 July, is it required to file FLA return?
We have to see
Yes,
see the status of the company as on 31st of March. If it has FDI or ODI as on 31st March, return is required to be filed. So interim period, 31st March and between 15 July, that is not to be considered.
Right. A company following financial year other than April, March, does it have to prepare another set of audited financials for April to March for return filing? Yes, they have to, right?
Yes.
not the audited part, Sumit. It can be on the basis of internal assessment for so far as 15 July is concerned.
Yeah.
But we anyways have audited figures for income tax filings also. If there is any variation, so we always prefer to file in here on the basis of audited numbers as well.
Right. Okay. Is there any process to change the email ID, email address for login, or do we need to create a new account for the same entity?
So after logging to the portal, if you need to change the email ID of the contact person, that can be done after login. But if you need to change any of the detail of the authorized person, then the account has to be deactivated and a new account has to be created. So authorized person may or may not be same as contact person.
Okay. Is there any process we can change the name of the company in FLAIR? In Feb 25, we have changed the name of our company.
So we already clarified certain cases in which the account has to be deactivated. Name change is one such scenario. You need to deactivate the old account, create a new account.
Sure. So I think what we can do is, as a governance, Ankita, your portion on again the flare registrations. Is that your part of the thing you can answer, and Chandan you can answer the parts of the returns. So that way, I think the allocation will be proper. Okay. Anil asks, what is the process to change the authorized signatory details as authorized signatory has left the organization? Do we need to create the new user registration?
So these activities we prefer that needs to be done before the authorized person leaves the organization, but because all the logins and everything is received on the authorized person email ID, but you can still change it by deactivating the old account and creating a new account.
Or else, if it is an official mail ID and if the IT can sort of access the person who has left, and then accordingly they can change the email IDs, right, Ankita?
Yeah.
Yeah.
In case you don't have time right now because you have to file the FLA return, you can take this approach, but later on you'll have to do it.
Okay. Madhur asks, if the preference shares are issued in 2007 to foreign shareholders and FCGPR was filed initially at the time of investment, but there's no FLA is filed, what are the consequences and how it can be resolved? So it was never filed, as he's saying. Yeah.
So for last 3 years, LSF will be applicable, and for previous years, compounding will be applicable. But before that, we need to make the default good. We need to file all the FLAs for previous years, and then apply to RBI for compounding of offense. And for previous 3 years, we can opt to pay simply LSF.
Sure. So, Madhur, you'll need to go for compounding as well, and therefore, please approach the professionals for compounding. Yeah. Okay, Rishi asks, if we are a listed company and we have not made a allotment of shares to foreign shareholder, but they have purchased our company shares from a stock market and holding is less than 10%, still we have to file FLA return?
No, in that case, it is not required because the investment comes under foreign portfolio investment route, not under foreign direct investment. So FLA is not required to be filed.
Yeah, but there was a portfolio return section in the return, Chandan.
It
So
is
you're
there, but the underlying point, Sumit, is FLA is required to be filed only by those companies who have received FDI.
Hmm, hmm, hmm. Right. So FDI is the main applicability, and if
FDI.
they have received FDI, even foreign portfolio investment also needs to be reported. But if it's
Or for
only
example,
portfolio,
if you have
then
done
it doesn't.
any, yeah, or for example, if you have done any ODI also,
Hmm.
right? There is no FDI, but there is ODI, and you are
ODI.
filing FLA return, then you would need to mention details about foreign portfolio
Right. Right.
investments.
If a company is incorporated on March 20, 2025, do we need to file FLA for 24-25? That's a good question.
If the shares are not allotted till 31st of March, we don't need to file. If the shares are allotted by 31st of March and there is shareholding in the balance sheet, then we need to file
But
FLA.
in case of a new incorporation, the shares would be deemed to be allotted on the date of incorporation, isn't it? If it's a foreign shareholder straight away.
Yeah, but then we need to see if we have received the application money also or not, because that is the
Hmm.
underlying criteria. Before we
Yeah.
file FCGPR, the remittance of money is pretty important.
Yeah, so I think if the money is received before 31st March and it was incorporated on 20th of March, then probably the FLA will
Then
need to be
yeah,
filed.
we
It's
would
better
need
to
to
be
be filed.
better to file it in that case, any which ways.
Yes,
Yeah.
yes.
Prateek says how to change authorized representative.
So you have to deactivate the old account and create the new account.
Yeah. If a company is incorporated on March
Same
20, okay, I
question.
think this is done.
Repetition.
Same question. What if we are not filing revised return post audit? In any case, in next year, we will be revising the figures when filling the previous year figures.
So
So
in case there
it
is
will
any,
come under variation report. So therefore, it is always advisable to file on the basis of audited numbers.
Means he's saying that is it necessary to revise after the audited, or anyways the next year they will file based on the last year's audited?
See, earlier there was a due date for filing on the basis of audited numbers also, but which has been removed by RBI. It was 30th September earlier, but now the due date has been removed. But for audited numbers, uh, you know, we should file on the basis of those, so that, because if there are a lot of variations, you will get a query from RBI that previous year you have reported these numbers, now you have changed previous year numbers. Unless you have filed on the basis of audited revised numbers, you will face queries from RBI.
So are we saying that the revised return can be filed anytime in October, November, December, like there's no limit
Yes,
now?
yes.
Okay.
but one thing I'll need to add here is before revision, you need to make a request to the RBI. Otherwise, you'll not be able to file it.
So how to make that request?
You have to log into the portal, then there is option to apply for revision, and there only you can see the status of your request, whether approved or pending.
So you're saying only when RBI approves the request for revision is when you can file, otherwise you can't file.
Yes.
Okay. Nice. Okay, will the recording be shared? Yes, the recording will be shared. Please subscribe to our YouTube and LinkedIn channels and you will receive alerts when the recording is uploaded. Suraj says, in case the ODI investment has been transferred during the year, however, the same is not updated in the RBI records, that is project profile of the company. In such case, the FLA should be filed by the transferor or the transferee.
See, ODI, in case there is an ODI by the Indian company needs to file. So there is no point of transfer or transferee. So it's about Indian company having assets abroad. So if the ODI investment has been transferred and Indian company does not hold as of 31st March, we don't need to file. Compliance with respect to disinvestment is separate, right? So, like project profile is still appearing, so we would need to ensure compliance under overseas investment regulations for clearance of our file. But if in your books there is no ODI as of 31st March, as per RBI, we don't need to file.
Yeah, probably the question was that maybe one Indian company has transferred the ODI to another Indian company. So whether the transferor needs to file or transferee, but I think my opinion is that as on 31st March, whoever holds the
Yeah,
equity
that's right.
will actually file it, right?
That's right.
Yeah. Okay, please explain the penalty part again. So if you could articulate, Ankita, what was the penalty for non-filing?
So we have to file the FLA return by 15th of July. If it is not filed till 15th of July, it is considered as non-compliance under FEMA, and LSF will be imposed, which is 7,500 per return. In case of delay of more than 3 years, compounding will be applicable.
Okay, so 7,500 per return. There's no per day penalty, no variable penalty. 7,500 per return. Yeah.
Straight.
Okay. So even if you're
In case of compounding, Sumit, there is a per day penalty also, or per month penalty, which is levied. But in case of LFS, it is fixed to 7,500.
so like for the last 3 years, if the returns have not been filed, LSF may be paid for last 3 years, right?
Yes.
More than 3 years, then compounding is applicable. Okay.
Yes.
We want to close 2 step-down subsidiaries and transfer those to wholly owned subsidiaries all in Mauritius. We are Indian listed company. How to proceed? Jayanta says, I said, approach eMinds Legal. They will sort of help doing all of that.
This is with respect to compliance under overseas investment regulations, but and not with FLA. So we are happy to help offline.
Yes. Please contact Chandan at emindslegal.com and I'm sure you'll get the solution. Can a relative of director come shareholder of Indian parent directly finance to wholly owned subsidiary? Chandan, if you can read the question, it's a very long question.
Can relative of director come shareholder of Indian parent directly finance to wholly owned subsidiary in Mauritius as RBI flagged issues in APR submitted by Indian parent company on behalf of wholly owned subsidiary? What I understand is the director or shareholder has directly invested in the wholly owned subsidiary based out of Mauritius, which means Indian company does not hold any shares or any investments into that Mauritius entity. In that case, FLA is not required to be filed unless we have any other FDI or ODI.
Yeah. And Jayanta, but it looks like there are quite a few facts in your case. So please take professional help before taking decisions. That's what I would advise. It would be possible to share the PDF copy of the FLAIR form.
When we downloaded it somehow, we need to select the sections and all. So,
Again,
Ankita, do you
write to
have
us.
this?
Probably write to
You
us and then we can share. Yeah. So, yeah. Okay. Tapan, if the company has not started any business operations but has FDI, the company is still a project at a project state. Do we need to file the FLA return?
So as on 31st of March, if the company has FDI or ODI, irrespective of the fact that whether business has started or not, or the project has started or not, FLA return is required to be filed.
Right. If NRI holds more than 50%, which option to select? I think you answered others, right, Chandan?
Yes.
If NRI is holding, because it's not a company, so there was
Individual
subsidiary,
investor is
it won't be
holding.
called as a subsidiary. Yeah.
That's right.
Tarak Shah says we are into human healthcare activities. My subsidiary is receiving foreign exchange while treating the patients. However, there is no NRI shareholding, neither FDI nor ODI. Are we required to file? I don't think then we
No,
require to file. Yeah.
we don't need to.
Yeah. Just import, export, or just foreign exchange earning or outgo doesn't necessitate a FLA return if there is no FDI or ODI. Okay. Then in case the previous year returns are not filed, can you file the returns now? I think we've already covered that.
Yes.
Last 3 years, you pay LSF of 7,500. For more than 3 years filing, you need to do compounding also, right?
So he's got
Yeah.
another question also, Sumit, whether those returns will be filed on FLAIR portal or through emails and all.
Right.
Ankita, maybe you would need to like to answer this.
So email-based system has been discontinued from 2019. You need to file it on the FLAIR portal. For the previous return, you have to apply to the RBI to open the revision for you. So only if the RBI approves, then you can file the return. But depends on the quantum of delay, the year of delay. If it is more than 3 years, it will fall under the compounding category. If it is less than 3 years, LSF can be paid.
Okay. To deactivate existing user account, from which mail we need to share deactivation request to RBI? Any mail IDs is fine, or new authorized signatory mail ID?
So the authorized person can send an email to the company, email ID of the company. If the other person can also send the email to which the request has to be made is survey FLA email ID. You can just send a request with the company registration number, username, and company name, along with the reason for deactivation, and your account will be deactivated in a day or two.
Okay. Then I'm looking at now, we can't answer all the questions. There are whole lot of questions. So what we can do is, in the interest of time, we are at 1:29 p.m. What we can do is we can take a few more questions, and then Chandan, if we can consolidate all the queries and put up some brief answers and circulate to the attendees. I think that will be a very good value add to the attendees.
We
If we
can
can
do so.
from
We are
eMinds
there
leading.
to. We can do so, Sumit. I think that will help everyone. Even if we, clear some doubts, online, but some doubts still remain, and we can provide a document with all the FAQs and their answers, brief answers.
Right. Perfect. We will do that. So I think a couple of more questions I'll take, and then we'll wrap up the webinar.
Yeah.
So, okay, Diksha asks, does a company with downstream investment but no foreign direct investment need to file an FLA return?
This has already been answered. In the company which have received the downstream investment, that company is not required to file the FLA return.
Right. Okay. Now, Swati says, where should we mention the fees received against the services from subsidiary outside India?
If there is any outstanding balance, then we need to report. If there is no outstanding balance and the fees was received during the year, we don't need to report that.
Okay. Then maybe one last question I'll take. Chandan, Chandan and Ankita, would you like to select from the unanswered questions one good question which catches your attention and you'd like to answer?
See, Amit Shankar asked, company is incorporated on 18th April 2024 as foreign subsidiary but has not filed FCGPR till date. Can this company file FLA? Yes, it can file FLA. Both FCGPR and FLA are different compliance requirements. So even if you have not filed FCGPR, do file your FLA. Don't delay your FLA in any case.
Yeah. Ankita, you can find your favorite question.
Yeah, so I have seen this question. When adding the equity share capital number of shares, if you input that figure in absolute number, the amount column is auto-populated with no provision of giving the input of face value of the share. Any workaround for that? So in the first section of FLA, it asks you the what kind of share the company has, how many classes of shares the
Yes.
company has. If it has one class of share, it gives you option to enter the face value of share. If it has more than one class of shares, in the second section, you need to enter the data amount manually. So it is possible to enter the amount, but you need to fill the first section correctly.
Okay. Okay, on that note, I'd like to share one more thing personally. First, let me just share my screen. Okay, so this is one newsletter that I publish on LinkedIn. It's on leading with emotional intelligence. So I'm a doctorate in emotional intelligence, and if you would like to read articles on emotional intelligence, occasional articles, these are some of the last ones that I wrote to on how to give feedback and leading with respect and being on judgmental and emotional triggers, etc., etc. So please do subscribe to this newsletter, or else you could also follow me on LinkedIn, Dr. Sumit Pahwa, and I'll be happy to sort of share my little bit of whatever I've learned through these LinkedIn articles and my notes. So these are some links I've mentioned in the chat box. You could connect with me on LinkedIn or subscribe to my newsletter also. So that was on a personal note. On that note, Chandan and Ankita, thank you very much for a wonderful session. I think it was a very deep dive, expert, technical session on the return, and thank you for answering tens of those questions and a few more which are not yet answered. But then you promised me to make a booklet and then we will circulate to all the people who registered and some of them many of them who attended as well. So thank you for wonderful sharing of insights. Thank you to the audience for turning out in large numbers. for this important topic. And thank you to the COMPLINITY team for organizing this and marketing this and putting up the whole show. So thank you, everyone. And on that note, bye. Bye for now.
Thank you.
Thank
Thank you,
you.
Sumit.
Thank you, Sumit.
Just 1 second. Would like to thank you and Complimentary team again, and my partner Preeti here, and my teammates who have helped us, shaping this entire PPT, and who have been working day in day out on the FEMA compliances. Sneha, Kashika, Diksha, Suruchi, Swati, and the entire team. So whatever we are coming up with is the knowledge which the entire team holds, and I hope that we've been able to do justice
Yes, I think there's some network
of the
issue.
live from your
Yes, Chandan,
side.
you've been able to do
Thank you.
justice, in my opinion, and I'm sure the audience also loved it.
Thank you.
Okay, thank you. Bye.
Thank you.
Welcome to COMPLINITY Technologies. COMPLINITY is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. COMPLINITY is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000 plus laws and 24,000 plus compliances, all in an integrated platform that is easy to use with automated alerts and risk management capabilities, is why compliance managers, general counsels and chief financial officers choose COMPLINITY every time. Join the most innovative and prestigious brands that use COMPLINITY. Automating your compliance management. Request a demo at complinity.com.